Hi, this is Daniel with Unrivaled Investing. Today we are going to talk about Hyliion, the company that is trying to revolutionize the commercial trucking industry. The ticker is SHLL, and in the future it'll be HYLN. Let's dig in. So the purpose of this video is to first of all give a little background on where does Hyliion come from. There's this tortoise acquisition vehicle that has the ticker SHLL. There's Hyliion. What's the background there? What's Hyliion's business, financials overview, and then my thoughts on the valuation. But before digging in, if you're interested in finding potential multi-baggers, companies that could go up hundreds or even thousands of percent, hit subscribe to this channel. Also, if you're interested in seeing what I'm buying and selling in any given month, go to unrivaledinvesting.com, click on that journey button. Also, if you're already a subscriber to this channel, feel free to leave a note or a comment below this video to say like, hey, thanks for the video, or here's a company that I think is interesting, take a look, and I'll respond to you. So let's dig into the background on Tortoise Acquisition Vehicle and Hyliion. So in June, Tortoise Acquisition Vehicle, ticker SHLL, announced they would merge with Hyliion, which is a private company up until this point. So the Tortoise Acquisition, their ticker is SHLL. It's a SPAC. Whenever I see SHLL, I can't tell if it's shell or shill. That's a little joke for you to think about. Maybe I'm getting a little pedantic. But first, what is a SPAC? And so a SPAC is a special purpose acquisition company. Really nothing that special about it. It's an acquisition vehicle designed to find a company to buy either in whole or in part. They're otherwise known as blank check companies. So you have this company where all of its value is cash, and management is assigned to look for a company to go buy with that cash. So Shell, or Tortoise Acquisition, has $235 million in cash waiting to find the right partner, actively looking to find the right partner. And the people that invested in Tortoise Acquisition give Tortoise Acquisition, or Shell, a couple of years to find the deal. Otherwise, they can get their money back. So why do SPACs even exist? And so the stated reason is that it makes it easier to take companies public. For example, Hyliion, which is the company that Shell Acquisition is getting involved with is merging with, you don't have to do this really intensive IPO process where you find all these investors that you're going to do this deal with. There's no intensive IPO process for Hyliion. What's the real reason that SPACs exist? And the real reason is that investors are desperate. In TINA is there is no alternative. That's the world of low interest rates, and that's where we are right now, where cash yield zero, bonds are pretty much there as well, and stocks are very expensive. SPAC investors is a way for speculators to try to make some money in a risk-free way, or presumed risk-free way, where SPAC investors have the right to reject the deal if they don't like whatever management finds, and they get the majority of their money back. They can get like 90-95% of their money back. But if, let's say, the stock market loves the deal that management finds, and the stock price goes parabolic, that those same SPAC investors can get this huge upside if the stock goes way up. So they can capture the upside of exuberance while limiting their downside to 5-10% at most. Plus, the system is incentivized to do these deals because bankers, the ones who find these people, they generally, that find the investors, they generally get at least a 5% cut of whatever money is raised. So they are very interested in doing SPAC deals. And so far in 2020, SPAC share volume, so the dollar volume of new SPAC issuances, is more than double all of 2019. So that this is reflecting the times in 2020. People are very desperate to find ways to make money. And this is one way for investors, speculators, to cap their downside while potentially capturing an exuberant stock market. So what questions should SPAC investors consider? So the first is an IPO comparison. Would this company have been successful at all if they went through the IPO process? For example, when you're going through the IPO process, you're going through a roadshow, you have to find all these investors that are willing to invest in your company. It's not just an idea. Um, and that's a very intensive process, going around the country trying to drum up business. And then you also have to build out this detailed report on what the company looks like. Could this company have raised the same funds they received? That's something that I'm not going to directly answer that in this video, but it's something that you should, as a viewer, should be thinking about as I talk about Hyliion from here. The next question that SPAC investors should consider is, what's the general performance of SPACs? What's the base rate, to use statistical language? The answer is not great. Despite the initial pop that you generally get when you announce that you found a deal, management said, hey, I run this SPAC and I just found this company that we're going to merge or acquire with. 60% of the SPACs from last year are actually below their IPO price. So in other words, if you raise money selling to the initial shareholders at $10, you get that initial spike when you announce a deal, but after you actually have to prove yourself, 60% of those companies are now below that $10 mark. So below the amount that the cash that they received at that amount. So it would have been worth more for the initial shareholders, if they had held on the whole time, just to hold on to the cash versus actually doing a deal. But what I suspect is many of these SPAC shareholders, if they start off and they see an exuberant stock market, they sell into them because they can, and they can get a nice payday. So how is this relevant to Hyliion? So Shell, or Tortoise Acquisition Corp, with $235 million in cash, and that was the basis of their company, plus a private placement of around $325 million, are buying about 40% of Hyliion. The proceeds, those combined funds, are going into Hyliion. So Hyliion will have a balance sheet of about $520 million, a net balance sheet, which is amazing that $40 million, because you're probably thinking 235 plus 325 doesn't equal 520. $40 million of that raised goes to the bankers. So it's like, holy cow, 7% goes to bankers for a company that previously pretty much had zero on their balance sheet. Okay. Well, at least the existing Hyliion shareholders, which is about 60% of the company, are sitting tight. At least they're not getting a payday with this. So that's a good thing, right? Like, they're not cashing out on, the SPAC investor getting in. And the shares of Shell, or Tortoise Acquisition, will transfer or convert into Hyliion stock. So you'll start seeing it trade as HYLN once the deal closes. And existing Hyliion shareholders, one of their perks is that 60%, they'll be able to eventually sell their shares to the public. They'll now have a public market for their stakes. So what is Hyliion's mission? What do they do? All this time we've been talking about SPACs. What does Hyliion do? And their mission is to be a leading powertrain provider of electrified solutions for the commercial vehicle industry. They're trying to revolutionize the trucking industry, where they're electrifying trucking. They're reducing greenhouse gas emissions, lowering the total cost of ownership. There's huge demand for this. They think they're tapping into an $800 billion market opportunity. Wow, honestly, all these things sound great. I would love a world with less greenhouse gas emission. I would love electric trucks. I think that sounds really cool. Cheaper is obviously better, lower total cost of ownership, big market opportunity. All sounds great. What products are they actually selling? Because this is sort of their mission statement. So they have what's available today versus future solutions. What's available today is they have these hybrid solutions for diesel trucks, for example, where you can see the savings versus diesel is about 6%. Whereas in the future, and this is something that they definitely want you to focus on, is they will sell an all-electric truck. And you can see that over here. And where they're saying the savings versus the alternatives is pretty dramatic. The all-in cost, 7-year total cost of ownership for their hyper truck will be a little under 300 grand, which will be materially lower than these other electric truck providers. So wow, cheaper than Tesla. How would it even compare relative to Tesla's electric truck? And it's like, wow, they're going to crush Tesla on the range. They're going to crush Tesla on the payload, on the refuel or charge time. Wow, that's incredible what they've got, what they're going to be selling. It's so incredible. It reminds me of this bet I made with some friends, and let me share this bet with you. I think I can beat LeBron James in a one-on-one basketball game. And you're supposed to be like, what? Yeah. So there's two ways to size this bet up. Like, one, you can ask a lot of questions like, what? Daniel thinks he can beat LeBron James in a one-on-one basketball game? Like, what is he talking about? Like, he said, does Daniel play basketball? And the answer is no. But let's keep going. How tall is he? Well, around 6 feet. How fast can he run? Depends on the day. What's his dribbling skills? Oh gosh. Let's assume they're amazing. Can he shoot a three? Honestly, I haven't tried, so let's just imagine that I can. So that's one way to size up this bet. Like, could Daniel beat LeBron James in a one-on-one? Or you can believe it when you see it. So how does this apply to Hyliion? And here's the outline that management has provided, in their investor presentation, where they're saying, look, we expect to start selling these electric trucks in 2022. Cool. Give it a little time. We're expecting pretty much zero revenue this year, maybe a few $1,000,000 in revenue next year. And then just incredible revenue growth a few years out, like $2 billion as we're selling 20,000 trucks a year. They think their business model is completely funded. That $500 million in cash that they're going to have is going to be enough for the factories to build all this trucks and the hybrid units, and it's going to be great. And they're going to be really profitable, generating $600 million in EBITDA. And that's what management's saying. Like, that's what they're saying. I'm going to beat LeBron James in a one-on-one. Pretty simple. So in summary, Hyliion is effectively a startup. And LeBron, if you're watching, game on, man. Game on. So Hyliion's effectively a startup, limited revenue. But Daniel, like, whoa. Like, this LeBron James thing is ridiculous. Like, Daniel, I haven't seen you play basketball. Like, but there's actual, there's something to Hyliion. Like, they have a pre-order for 1,000 Hypertrucks from this logistics leader. Like, dude, you don't even own a pair of, Nike basketball shoes. Fair. And that's great that Hyliion has pre-orders. But as a potential shareholder, as a investor, I can wait for Hyliion to execute and prove their technology, their sales channel, their capital needs, their broad business model. I can wait. I can wait to watch them execute. And for current shareholders in Hyliion stock, whether or not shareholders or what I suspect are mostly traders and speculators, how much are you paying for this privilege, this option to watch Hyliion execute? You're paying about $8 billion, 160 million shares pro forma for the deal. Share price currently around $49 a share. This is the 1st of September, 2020. So what's my take? Am I buying Hyliion? And the answer is no way, dude. It's in the too hard pile. Like, $8 billion valuation has a lot of assumptions built into it that I simply can't underwrite. Like, I want to see the execution. I want to see deliveries. I want to see that the technology is actually anywhere near what they're talking about. Like, last I checked, Musk is landing rocket ships on little barges out in the middle of the ocean. I think he's going to be able to deliver some cool stuff. What have you delivered? That's my level of skepticism. Like, I want to believe it when I see it. Just like that one-on-one. I want to see Daniel's basketball skills before I make a bet like that. Even though I think you don't even need to see my basketball skills to have a hunch on how that game would turn out. So, but Daniel, the stock is going parabolic. I mean, it was $10 earlier this year before they found the deal, and now it's $49 a share. Like, those initial SPAC investors have made 5x their money. This is incredible. Yeah, that's okay. Like, good for them. I don't have to own every winner. I can just focus on the companies that I understand, that I can have confidence in, and that, I would enjoy riding along with over time. You know, it's okay if someone makes money faster than me. I just have to be comfortable, A, finding the companies that I like, and B, making money over time. That's my goal. It's okay. There's no fear of missing out here. That's what's driving all this. Like fear of missing out. Like this is going parabolic. Great. That's okay. I don't need to ride it. I'm going to find things that I'm comfortable owning at a price that I'm comfortable owning. So here's my hot take on this. So investing really is no different than Aesop's fable, where you're sizing up one bird in the hand versus two in the bush. You know, can you easily see those two birds in the bush? Are they actually there, or is it just the bushes shaking them? You know, the fable was that one bird is worth more than two in the bush. But you're constantly trying to size up, like, what's actually the opportunity there? And if you're trading 8 billion birds in cash today for potentially no birds in the bush, i.e. need to prove the business, you know, generating de minimis revenue, that strikes me as a poor risk reward. So for me, it's a hard pass for now. I'd love to see them execute in the years ahead. I'm also reminded of the base rate of most SPACs, where they generally dip below the initial offering price of $10. So, you know, as reality meets expectations, sometimes investors sour. If you're interested in seeing what I actually am buying or selling in any given month, go to unrivaledinvesting.com, click on that journey button. That way I explain what are my top holdings, why do I hold them, and what's the reasoning behind it. What's my view on the risk reward from here? Also, if you just enjoy these videos, your patronage enables the production of these educational videos. So thanks so much for the existing subscribers. If you enjoyed this video, please hit subscribe, and thanks so much for watching.